Hello everyone, this is Manav Modi, your bullion analyst. Welcome to the Commodities Buzz. Let's look at how the previous month was and our view for the first month of the new financial year. Talking about the precious metal pack, gold surged above the $3,000 amid geopolitical shocks. Silver crossed rupees 1 lakh driven by the economic uncertainty and industrial demand. Both metals posted gains of more than 10% YTD. Markets remained volatile across both riskier and safe haven assets. US trade policy changes is causing sharp price swings. President Trump announced tariffs on several products and countries, but they were not as aggressive as market expected. Risk on and off sentiment in geopolitical tension, that is, Russia-Ukraine war, took some pause while tensions between Israel and Gaza was reignited. Fed kept the interest rate unchanged. Powell signaled a wait-and-watch stance on Trump's tariffs. Fed projected a higher inflation, cautious economic outlook. Dollar witnessed some recovery towards the end after being steady for most of the March. Gold could consolidate in a broad range after falling off from the all-time highs. Looking at the energy market, market participants' optimism about a strong cyclical recovery is dampened by most recent concerns about the impact of tariffs on economic growth and fuel demand. Prices also got support from the news of US President Donald Trump imposing a 25% tariffs on any country buying oil and gas from Venezuela and maximum pressure on Iran. For India, oil imports from Venezuela increased in the late 2025 and early 24, becoming top Venezuela crude buyer. Data showed that as out of 1.4 billion barrels of oil imported by India in April-December 2024 period, Venezuela accounted for 1.05% of Indian imports, importing 15.5 million barrels of oil from Venezuela. Russia-Ukraine ceasefire talks raise the prospects of increased Russian oil exports if a resolution is reached, and the OPEC Plus production hike as early as April also pointed to more supply. The IEA projected that global oil supply may surpass demand in 2025 due to a downward revision in demand growth forecast. Looking at base metals, if we talk about the copper price rose for the third consecutive week following tariff woes, deepening price dislocations between LME and COMEX, firm dollar index, and improved economic indicators from China. Premium of copper futures on the CME over those on the LME surged exceeded $1,000 per metric ton. This widening gap is primarily attributed to market anticipations of potential US import tariffs on copper following similar measures imposed on aluminium and steel. Copper CFTC long positions have been rising significantly over week-on-week basis. If you look at aluminium, it witnessed some profit booking from recent highs as improved availability for raw material reduced the premium over prices. Meanwhile, zinc held firm following Nystar's announcement of a 25% production cut of its Hobart operation in Australia amidst rising cost and negative treatment charges. Cancelled warrant for zinc also have been increasing since the past month, soaring to about 9,668,000. China's continuous efforts to boost its economy and positive economic data points from China is likely to act as a cushion to prices.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.